Here we are back at Premium Pooch Palaces, and today we're going to talk about how to do the journal entries for and posting for the labor or payroll. And if you take a look at the end of your regular transactions, so here are your regular transactions that start on the 26th. And we're going to go to the end of those, and we're going to see here, payroll of June 30th. The weekly payroll shows gross hourly wages of $26,490. And what this means when you're talking about hourly wages, you're talking about wages of the workers. And we're specifically here talking about wages of the factory workers. And so they have a gross wages of $26,490 and payroll taxes withheld from their checks of $69.34. Then we also have semi-monthly payroll for salaries. Now salaries are usually paid to management type people, and so, but we're still talking about the factory here now. So we're not talking about any kind of office related management or workers. We're talking about factory management and factory workers. And so here the factory management is paid twice a month as opposed to every week, and their gross wages is $6,056 and payroll taxes withheld of $1904.69. So our first step is to actually make a journal entry showing these wages, and then down here in the next paragraph it tells us that labor then needs to immediately be allocated to the jobs for direct labor, or if it's indirect labor, it needs to be allocated to overhead. And so it's coming into the labor account up in that first set of entries, and then is coming back out and being allocated to either direct labor, which is work in process, or indirect labor, which is overhead. And we are also given a set of analysis of time tickets, TTA, time ticket analysis, for the week ending June 30th. And that shows us the direct labor and the indirect labor that went with this 26,490 of the weekly hourly wages. Now salaries of the 6056, that is for, again, management people who aren't working exactly on the dog houses. So that is automatically going to be indirect labor, all of it. But for the 26,490, part of that is direct labor, 18,095, and part of it is indirect labor. So let's take a look at payroll in general. We learned in Accounting 101 that payroll is calculated from, first of all, calculating the gross wages based on their regular time and their overtime, if any, and then subtracting any total deductions from that, and that will give us the net pay, and that's how much we're going to actually write that person's check for, as the net pay. And we learned in Accounting 101 that the gross wages is going to be debited to an account called wages expense, and the credits for total deductions might be a whole variety of credits. We might have Social Security tax payable, FIT tax payable, Medicare tax payable, health insurance tax payable, if we took health insurance out of their check, that has to go to the health insurance company, etc. And then we're going to credit cash for the net pay, because that's how much we're actually writing the check out to this employee. Now, in Accounting 101 at OC Tech, we had a project called Pony Rides to Go, and in that, rather than having separate liability accounts for each of the taxes and health insurance, etc., we just had one account called payroll tax payable, and we just put all the payroll taxes into that, and that is what we are also going to use here. And so the other thing, though, is that when you're talking about factory wages, we're not going to debit wages expense. So we are not going to do this. Instead, we're going to debit labor. We're still going to credit payroll tax payable for the payroll taxes that were withheld. We're still going to credit cash for the net pay. In Accounting 101, you also learn that every time there is payroll, we also have a second journal entry in which we debit payroll tax expense and credit payroll tax payable for the employer costs. The employers have to match the FICA, and they also have to pay some unemployment taxes, FUTA and SUTA. And so those are all done as a second journal entry. Here for this project, we're not worrying about that second entry, although in real life, rather than debiting payroll tax expense, you would debit overhead. All the employer costs would be considered overhead. We would not put those to the job. Now, let's take a look. Here we have a T account for the labor clearing account. And remember that we start out with a zero balance, and all of our wages that are coming in to the labor account are being debited to the labor account, just like we did here. Okay? Whenever we debit labor, that's when we're having the wages are coming in. But with the labor clearing account, that's why it has the word clearing, because we're constantly clearing it. It's just used as a something's coming in and something's going out immediately. And so here, as soon as we do that entry, we are now going to take it out of that labor account and allocate it immediately. All that labor is either direct labor or indirect labor. So we're going to debit labor regardless of whether it's direct or indirect. If it's wages expense for the factory, we are going to debit labor, not wages expense. However, once we have it in the labor account, now we have to take it out of there and say, okay, well, this part is direct labor and it goes to work in process, and this other part is indirect labor and it goes to overhead. And so I'm going to do this journal entry. I'm going to debit work in process and each separate job number for anything that's direct labor. And I'm going to debit overhead for the total of the indirect labor. And that, of course, will then have to be posted on overhead analysis sheets. And the direct labor will have to be posted to each separate job number. And finally, I'm crediting the labor clearing account. So by the time I get done with these 2 journal entries, I should have a 0 balance in my labor clearing account, just like I had to start with. So here we have 2 entries. We have the hourly wages of $26,490. So you're going to debit labor and credit payroll taxes of $69.34.26 and figure out and credit cash for the net pay. Then immediately you will have to take that back out of labor clearing by debiting work in process all of these jobs for all of these amounts that adds up to $18,095 and debiting overhead for this $83.95 and crediting, of course, the labor. So you would have 0. Then you go back up here and you have this second entry, which is for the salaries, and that is all indirect labor. So that's going to go into the labor account and then come back out of the labor account and go in overhead. Here is our Excel sheets, our job cost sheets, and for each job you're going to put here, you're going to put the date, I'm going to put the reference, which is TTA, although you could say TTA 0630 because it's the TTA from June 30th. You're going to say how many hours which you were given goes into this particular job is job 121. Okay, so how many hours went into job 121 and what was the total amount of labor cost that went into that job. And you'll go through each of these jobs and put in the date, the TTA reference, the number of hours, and how many dollars that was. For the overhead, you will of course have a date, the reference would be TTA, the total amount of indirect labor of that journal entry, and then of course it would also go under indirect labor column, that total.